years of experience, he has established himself as a dynamic leader and a driven force behind the growth of retail sales at Motilal Oswal AMC. Under his leadership, the retail sales division has achieved remarkable expansion and elevation itself in new heights. About Ajay Khandelwal, Ajay has over 18 years of experience. Prior to joining Motilal AMC, he worked as a fund manager in Canara Robeco and BOI EXA investment managers with total experience of 6 years. Ajay has done his MBA from Tapmi, Manipal. Good evening, Ritesh and Ajay, and very warm welcome for today's session.
Thank you.
We're looking for the enlightenment session. Let's welcome both the gentlemen. Over to you, Ritesh.
Thank you so much, Rati, and very good evening to all of you. And great to be, addressing a session with JM Financial again. So, before I hand it over to Ajay to talk about this unique, portfolio which we are planning to come up with in the small cap category, let me take you through in terms of on Motilal Oswal AMC updates over the last 1 or 2 years. So Motilal Oswal AMC, as I'm sure most of you are aware, we are very niche positioning. We are primarily, asset managers which are managing the equity portfolios, and our portfolios are high conviction, focused, portfolios with a lot of, focus on getting the best ideation, high growth companies in the portfolio. So over the last 2 years, I'm sure you would have seen the AMC has come back very strongly across all the product categories in mutual fund, PMS and AIF. The fund house is 20 years old overall, and out of those 20 years, more than 16 years, the AMC has been able to deliver a positive alpha across 90% of the AUM, which is almost close to a 80-85% strike ratio if in terms of the delivery. Now, Motilal Oswal as an AMC has a very unique way of looking at things. So, for example, we have a very clear, distinct philosophy of QGLP, and within that QGLP philosophy, there are certain house themes which are getting represented across portfolio. So across our funds, we see 65% portfolio would be in certain very, very niche chosen themes, which our investment committee along with the managers and the analysts, they sit together and close on those niche themes. And the rest 35% the managers can pick and choose. So these are some themes which you will find across the AMC portfolios, not only restricted to one, but PMS mutual fund and the mutual AIFs also. So, for example, in hospital healthcare, we're talking about hospitals, lenders, insurance, technology in mid-tier, new age companies, chemicals, defense company, engineering, in urbanization, luxury. I'm not going to dwell into it because for that we have somebody, an expert, to talk about it today. So I'll skip it this part for Ajay, honestly. Now, as an AMC, over the last 2 years, we have done a lot of work to ensure our performance consistency is very, very high. So some of the risk frameworks we have added over the last 2 years is, for example, there's a proprietary framework we have made. It helps us to ensure that if there is an under laggard in the portfolio, we have a framework to point out that, and necessary action can be taken by the respective managers. We also put up a sector sizing deviation of 7.5% for mutual funds, both up and down. So we do not get too much on a stream allocation on certain sectors. Also in terms of allocation, while the respective our funds manager did do their own high or low allocation, but on a AMC level, we have, we look at having minimum 2% allocation single stock on a lower side and higher around 9% max on a higher side. So these are basically, sector weightages, maximum minimum exposure set. Now we have a very, very, robust and very, very experienced investment committee, which headed by Mr. Ramni Agarwal ji, Naveen Agarwal and Mr. Prateek Agarwal. And then we have our PMS and AIF managers along with the risk and the analyst team. The entire managers team, risk and our analysts, they report to Mr. Prateek Agarwal, who is the head of investment for Motilal Oswal AMC. Now, if you look at today, all our portfolios in terms of the earnings. So when you know in investment we say earnings are very critical. Prices are slaves of earning. So if you look at any Motilal Oswal portfolio like mid-cap fund, larger mid-cap fund, balanced advantage fund, or anti-top value valuation founder in the PMS side or on the AIF side, you will see all the portfolios will have an earnings which is in excess 15-20% higher earning than the, let's say, Nifty 50. Also, if in terms of valuations, most of our portfolios are under 2 price earning to growth, means these portfolios have high earnings and the P is also not very expensive. So overall, on the valuation side, the portfolios are quite attractive for investor to invest now. Now, we also have a very high skin in the game as far as the AMC is concerned. So across all our portfolios, you will see a very significant allocation from our group and promoters. So on an average, they have invested close to 5,000 crore out of a 60,000 crore AUM of the Motilal Oswal AMC. And I'm sure, like you know, you all I would like to invest in a scheme where the promoter himself or the group himself like to invest their money. Now that is something very unique, I would say, because if you take the cumulative amount 5,000, it is actually more than all the allocation of the promoters across various AMCs put together. So that's how significant. Now all the risk and the strategy I talked about now is showing in our performance. So right from our flexi cap fund to mid cap fund to larger mid cap fund to ELSs, all are in top quartile, with most of them generating alpha of more than 5 to 10%. Same could be seen in the hybrid side, balanced advantage funds, hybrid funds, multi-asset fund, all are delivering a very fantastic alpha. Same is true for PMS. I'll skip this part. So this is in terms of what's happening in Motilal Oswal AMC. We went through a slight challenging period around 2021, but like you say, class is permanent, form is temporary, and the same way we have bounced back like anything. Motilal Oswal portfolios are unique because if you look at the overlapping of Motilal Oswal portfolios versus the peer group, you will see hardly a 20-30% overlap with the peer group portfolios. I'm sure all of you would like to give your clients portfolios that are distinctive and portfolios which are actually creates a differentiation in the client's entire investment basket. Now that was primarily a very brief update on what's happening on Motilal Oswal AMC. Now happy to share that after a period of 4 years, we have been launching now a new fund from our side, which is small cap fund. We are an equity only focused fund house, like I told you. However, in our basket, one product was missing, which was small cap fund, and we were eager to launch it. We were looking out for the right person who would anchor this portfolio for us, and we found Mr. Ajay Khandelwal, who has a great track record in terms of small cap fund, while he is managing with his erstwhile AMCs where he worked. And we realized that I'll ask Ajay to cover primarily on why small cap now, but as far as our views concerned, I'm sure Ramdev ji interviews and lot of delivery he does on the various platform. I'm sure you would have heard it. We believe that next decade, next 2 decades, going to be a fantastic period for India in terms of growth. People talk about Amrit Kal, Swarn Kal. Point is that we might see one of the best periods in terms of the growth of the economy and the earning growth of the our markets. So while I hand it over to Ajay, all over to you to take this ahead. I think before that, I'll just put a question to you for maybe you can cover it during your session. Is that the first question which comes to the partner's mind is that is it the right time to invest? And I'm sure you will have ample data to highlight that why it is the right time, but that is something if you can stress upon it during your address. So all over to you, Ajay. Thank you so much.
Thank you, Ritesh. Thank you, JM, for giving us this opportunity. And I welcome all the partners. So regarding small cap, I think India is a growth story. So clearly small caps give you that unique opportunity to participate in corporate India's growth story, and you have so many options to choose from when you invest through small caps. So if in summary, I'm just putting few points here, how we are looking at small cap, what are the things that excite us about small cap. So it is not a general narrative, it's just that how we are looking at these things. So one is small cap clearly gives you this opportunity of participating into high growth, and the erstwhile small caps of 2005 to 8, 2013 versus now, there is stark difference. So we need to understand that this, the perception about small cap, that small caps are more volatile, risky. I think that is something which we want to address here. So the size of small cap itself is increasing. Because they are under researched, it is always fascinating for fund managers and analysts to explore this space, because we can find so many gems here and at a very good valuation. Then this whole basket of small cap now, it is expanding, काफी बड़ा हो गया ये. जैसे आप लार्ज कैप देखेंगे 100 स्टॉक है, मिड कैप 150 स्टॉक है, जबकि स्मॉल कैप ना फ्रॉम, अगर मैं इवन 2000 करोड़ मार्केट कैप के ऊपर का भी देखूं, we have almost 525 to 530 companies, and एक आप एवरेज 2000 करोड़ मार्केट कैप की कंपनी को देखेंगे, so you will see that they have reached to that scale जहां पे at least their revenue would be north of 500 crore, the profitability would be at least 50 to 100 crore. They have seen cycles. अभी वो management जो है quality at this point, suppose if you reach 500,000 crore, it is not just promoter, then they need to have next layer of management, तो professionalism आने लगा है. So इसीलिए ये जो opportunity है, it is now very different from 2015 and 2008. Then small caps clearly are under-owned. Now, if I have to look at the market cap of small caps is say 15% of the overall universe, all these small caps except small cap schemes, the representation is 10-11%. So if you want right representation, especially for an investor who has higher investment horizon, they need to have right allocation, and with other multi-cap, flexi-cap, the right appropriate proportion of small cap is not there. So small cap as a scheme is extremely important. And then, there are these sectors which are just not present in large cap and mid cap space. So you have these different sectors, companies, businesses which are present in small cap, and they have all the desired capabilities. So this space is very exciting. Now, quickly, Ritesh, we can move to the next slide. As Ritesh was talking about the earnings growth, so we need to understand when people say that last 2 years small caps have done well and Nifty has not done well. So there is clear reason behind it. If we have to look at Nifty, you will see that the large private sector banks, they are going through their own challenges. The large IT companies, पोस्ट कोविड पेंट अप डिमांड, उनका ना बिजनेस कोविड के बाद तो आया था, उसके बाद फ्लैटन आउट हो गया है. तो जो अर्निंग ग्रोथ था कोविड के बाद 25% का, अभी वो 5-6% रह गया है. सो इसी तरह आप ऑटो के 2 व्हीलर कंपनीज देखेंगे, फार्मा कंपनीज देखेंगे, आप देखेंगे कि निफ्टी के लार्ज जो बिजनेसेस हैं, उन्होंने अर्निंग ग्रोथ भी डिलीवर नहीं किया है. सो इसीलिए व्हेन वी से निफ्टी नहीं चला है, निफ्टी में वही चीजें चली हैं जहां पर अर्निंग ग्रोथ आया है, और उसका लार्ज पार्ट ऑफ निफ्टी है जो कि नॉर्मली ओन्ड बाय म्यूचुअल फंड्स है, वहां पे अर्निंग्स काफी वीक रही हैं लास्ट 1-1.5 साल में. वेयरएज जब आप स्मॉल कैप देखेंगे तो स्मॉल कैप का आफ्टर 2008 फाइनली जाके 2021 में अर्निंग ग्रोथ फ्रॉम 160 EPS अब आया है 230. सो ऐसा क्यों हुआ है? क्योंकि आप
Ajay, I'm sorry to interrupt. I request you to have more of English because the participants are more.
It's a pan India, yes. No
Yeah,
Oh
pan
yeah,
India.
I am okay. So
Sorry, yeah, nice. Continue.
yeah. So if why I'm saying is that this earning has come after almost 12, 13 years, because in between there's so many problems that happened for small cap. In 2008, we had global financial crisis. In 2013, we had taper tantrum. Then 2016, we had the demon, and then COVID, ILFS. So for small cap businesses, what happens is when these trouble comes now, they do not have access to financial resources. So this is why they have actually, there are so many businesses which have gone out during this time. In industry consolidation has happened. And finally, when these businesses are leaner, meaner, and they are performing, we can see that happening in the earnings. So small cap businesses now, if you have to look at their cost, they have brought down their cost. If you have to look at their capital expansion, they are very now careful about where you want to invest, how much you want to invest. And so this earnings is a culmination of all these factors. That is why you are seeing this EPS growth coming now. And with the kind of setup that is there in small cap and the growth drivers that we'll talk about, we are very clear that this earning growth is the start and it will continue for next 2-3 years bare minimum, given the kind of visibility that we have. So in small cap, we need to understand this growth is start of it and it will continue. Now, small caps, as I said, people have this notion that they are, smaller businesses, more volatile. But if you look at in 2013, the largest small cap company was 2,500 crore market cap, which is now 17,500 crore. The market cap has grown up at 6x. And even the profit pool, which used to be 45,000 crore, now it has moved to almost 1,80,000 crore. So that way, the overall size of small cap and profit pool both have moved over last 10 years. Next. As I said, see, in large cap, how alpha comes is when you are able to capture the earning deviation, but that earning deviation is also say 5 to 7%. Now, how much a TCS misses its earning estimate by 3-5%? Whereas in small cap, what happens is because they are under researched, the kind of projections, the kind of financials that are there in the market as consensus estimates, there is clear edge. If we work harder, bend our backs, we are able to find, if our estimates are far closer to delivery, and that is the edge that a small cap, a AMC or a fund manager has. So there, I think this is a space. I'll give you examples. I've seen in last 6 months, 1 year, where our earning estimates, we have seen upgrades of almost 30-40%. And stocks have gone up like 2x, 3x in last 9 months. This is when we are actually working harder, but that is the kind of earning deviations that happen in small caps. So this is a very potent space where you can find these businesses with absolutely good hygiene and exceptional earning growth. Next. So another thing, it is not that everything is hunky-dory and everything is moved up in small cap. But if you look at the top quartile performers and bottom quartile performers, you will see there's difference. Even in last 2 years, if I have to tell you, when specialty chemical was doing so well, all the stocks were up 3x, 5x. Look at last 1.5 years. They have gone through, trouble where their supply chains hurt their margins. So those stocks are still down 30-40% from their peak after 1.5 years. Similarly, if you look at where competition increased in either durables, AC, washing machine, or wood panel, say plywood, green MDFs, all these businesses where challenges are there, they're still down 30-40% from their peak. So not everything has moved up. What has moved up is where you have earning tailwinds, businesses delivered not just on earnings, but on cash flows, balance sheet improvement. They have shown where new areas they are now trying to expand. So this whole thing matters a lot. And small cap, I think one thing is also important. You need to find right ideas and you need to track them religiously, because things change. We need to adapt accordingly. So clearly there's distinction between top and bottom performance in small cap. I think this is what I was saying, that small caps are 15% of market, but they do not have right representation via diversified schemes. Yeah, we can move to, I think people will go through this slide also. So now why small cap is again looks very interesting to us is because if you look around where earnings are coming, whether it is manufacturing, what is happening because of import substitution, where government is trying to focus, they are giving PLI schemes, where if there is power deficit, then the utilities companies, they are trying to get more equipment. If you look at any of these sectors, the actual beneficiary of those sectors, of those tailwinds are these sectors. So small cap has this unique opportunity right now where I think they are going through their best time, where we see balance sheet improvement, order book improvement, cash flow improvement, and we see visibility for next 2-3 years. So when we look at small cap, how we look at it is you have an opportunity, then you need a product or a service to capture that opportunity, and then you need skills. For example, financial resources, you need right management bandwidth to capture that opportunity. So when people say healthcare stocks, hospitals have moved up, what we are trying to tell them is you look at currently runway for growth. Today we have 15 beds per 10,000. Global average is 30, and in rural it is even worse. So even the developing countries have better bed capacity than us. So this journey from 15 to 20 to 30 is still 3-5 years away. So we are at the start of this journey, and the runway for growth is, I think, fairly clear. These businesses, so first part is opportunity. Second part is whether you have the right product. So yes, clearly these businesses, I'm just giving an example here, and this same can be replicable across industries. So now we have right therapy mix, we have right skilled doctors, we have right locations. The financial matrix allow them to generate that kind of capital that if tomorrow you have to do the expansion, they can do it through their own capital. And lastly, they are still trying to evolve. They are getting those new equipments, new healthcare professionals into the system who are experienced enough. So this whole thing, you have opportunity, you have product services, and you have the capabilities. But will it go like continue to grow in one direction? Obviously, it will not happen. So there will be ups and downs. There will be some challenges. So that is what we need to understand, that this journey will have ups and downs, but I think this journey is there for us where a lot of wealth creation will happen. So why now? I think this is the question people want to ask, because everyone has made money. They want to know whether this is the time to preserve their capital, or you should stay invested and make most out of it. So as I said, the earnings are there. Now let's talk about health of balance sheet for the small cap. So yeah, let's move. So I think this is another, no, let's go back. So what we are telling here is that, this 230 is already at 507. Even if you assume 25-30% kind of growth, we are looking at least 800 plus rupees EPS. So if I look at 800 rupees EPS, we are still below 20 times. And when there is growth differential between a large cap and a small cap of at least 10%, I think, see, multiple comes only from growth differential. So we need to understand the growth is coming here, and you will never find a good quality product cheap. It is very rarely it happens. So these small caps, and there is clear distinction between good and bad in small cap. There are cheaper small cap names also, but do they have that kind of quality, that kind of runway for growth, that kind of return on capital matrix? So there is distinction, but we see continuity of growth in small caps. Next. So see, I think we need to understand small caps. What typically goes wrong with a small cap is when you take loan and then you put up a facility and then something goes wrong with the product or the demand, then it becomes difficult for you to give it back to the bank. And that is where maximum small cap businesses have gone wrong. They have not been able to come up again. So if a business can be run through your own money, then your ability to take knock is much higher. So when we say that 2015, there was a one time when the same expectation was there that small caps will do well. You look at this, they required almost for 100 rupees of expansion of their money, they required 70 rupees of bank outside capital to put up a facility. Now the dependency of on 100 rupees of your own money, 70 rupees of bank money, it has come down to 30 rupees. So with every 100 rupees of mine, I only need 30 rupees bank capital. So my dependence on outside capital has gone drastically. I think this is one thing which should give confidence to advisors, investors, that small caps are not dependent on external capital now. They are producing enough resources that they are able to grow on their own. And so this is how we look at that, whether if we believe this is happening, if there are other data points to support this. So when we look at the last 3 years small cap IPOs, if 100 rupees are raised from small cap IPOs, only 30 rupees has gone to the business, 70 rupees has gone to the promoters and PE. So that what does that mean? That businesses themselves don't require now much money. They are capable enough. So that also gives us the confidence that small caps are in that stage where even if something untoward happens tomorrow, they will be able to ride this tide. Yeah. See, this is another question that liquidity keeps coming. We have seen how FIIs have impacted our market. Now, I think non-market players also talking about how much money is going to come in market. FII, they are looking at taking out money from China, and rest of the globe is under inflationary pressure. India is where the money is coming, but our domestic flows itself are so strong. So if that money also starts coming, imagine what will happen. And I think this is a structural story, because 2015, when India stack was not there, it was not that easy for even us advisors and mutual funds to bring people on our platform. Today, with the kind of SIPs, the demats that are coming, it's all because these technological changes have happened in India. And these changes, tomorrow, even if government changes, for example, something goes wrong, these technological changes are here to stay. Now, once somebody started using these technological products, it's never going to reverse. So I think this is where India is heading. These things will continue. When SIP numbers crossed 1 lakh, everyone thought, wow, what has happened? 10,000. Now it is reaching to, look at the levels. So I think it has surprised everyone. This is the kind of strength we have. Next. Now coming to the valuation part, because I think everyone is bogged down with valuation. So valuation, I think, we have to look at over a period of time. I don't think that only the peak is the right way, but just to get a reference, in 2021, trailing 12-month, small cap was trading at north of 30 times. Now it is 27, 28 times. So we need to understand, it is not that we have already broke the peak and we are at levels which we have never seen before. Whereas the business conditions and the earning growth is something which we are seeing after 15 years. So if I have to look at 1 year forward, it is below 20. 1 year forward below 20, I think, is a good number. And especially knowing that it is 550 stocks we are talking about. It is not 100, 150 stocks. We are talking about 550 stocks. So there are still enough bandwidth, you have enough basket of stocks to choose from where you will find it at a reasonable valuation. So valuation, according to us, if we have to look at the opportunity, if we have to see the differential in earnings in large cap, mid cap and small cap, I think these are fair valuations. See, another way to capture valuation is that overall the large caps and small caps, how they are placed. So if you divide small cap 100 by Nifty ka overall market caps, you will see we are at 0.66, which is again last 10 years range. If you look at this is a normal range. On the peak, we have gone to 0.9. At the bottom, we have gone to 0.4. So we are somewhere in middle of that. It's not that our starting point is, we are starting at the highest point. We are at average level there. So yeah, we understand the importance of GDP growth, how small caps react if there is general GDP growth across the economy. So that is there, which is also helping. Now, this is again incidental data. See last three, because people keep asking whether this is right time, this is right time. So we are just telling last 3 election cycles, market have given this kind of surprise. So you again do not have any reason to believe that if we sit it out, it will be in our favor. So this is again last 3 quarters, 3 years, 3 cycles data. If you look at it, is favorable for market. Next. Then the other question is, if tomorrow something goes wrong in the globe, what will happen? No, you have to go back. Because so much turbulence happening, there is wars happening, then so many diseases coming. But our small cap dependency on globe is fairly limited. We are 10% revenue comes from exports, and that too in last 2-3 events, if we have to look at, they have actually benefited small cap. So when Ukraine war happened, the gas prices started going up. Russia is looking for now their own sources. US with increases gas prices, they are trying to now strengthen their grid. So now we have these cable companies which are getting orders. We have these pipe companies which are getting order from both US, Europe. When forging companies, for example, benefited because the power cost went up so much. So forging companies for auto inks getting, high inquiries for small caps from Europe. So these adversities have actually turned out to be opportunities because we have scale, we have demonstrated that we have those kind of relationship with client. It's just that now we have become more acceptable to the world. We are better placed. So small caps that way have actually taken this as an opportunity, have seen improvement in their business. Next. So yeah, about I think one more fear that people have, interest rate and inflation. So last 1.5 year when interest rate cycle increase happened, now I think in 6 months down the line we are looking at interest rate cut cycle, though it will happen gradually. But we are also at interest rate wise level, we are looking at peaking of interest rate where it will start coming down. So this also responds better. This is better for small caps. So I have told you micro events, I have told you macro events. I think small caps that way are benefiting with the whole thing. So now why Motilal Oswal small cap? So see, Motilal Oswal small cap is why we are looking at this point in time, is because we are very confident about the whole landscape. We know that India, especially the kind of growth these sectors, businesses are going to see, we are in this journey of wealth creation. So we think we are fairly positive. That's why we think this is a right time. Second, I think if you look at the small cap space, there are funds which are running very long tail portfolios. And long tail portfolios are not very efficient. If you look at the bottom half and if you do the attribution analysis, it will not help. So here we are looking at a 30 stock portfolio, but we are very clear that small caps have some risks which are unique to small caps. So we will not have high allocations. We still will have 1.5 to 4.5 kind of allocation in small caps, but we will have 30 stock. So you are containing the risk by keeping your positions in size, whereas you are not having those large tails which are irrelevant for performance. So we are that way uniquely placed compared to the industry. Third, the quality and growth. I think small caps quality is very important. When we talk about quality, it is management's intention whether they actually want to create wealth. So we have seen over period how the business practices for small caps have changed. And there's so many industries. I'll give you an example. Building material industry went through so much of industry practices which got changed. Now you look at around yourself, the business now, the the proportion of bills, everything has come into former net. Some spaces still are there where we stay away from those places. But I think the business practices have improved. Secondly, the management have understood that if I get 100 crore of PAT, market rewards me with much higher market cap compared to if I take out 10 crore profit out of it. So this realization that right way of doing business and market rewarding. So this thing I think is clear change. So quality of management has improved. We are looking at promoters who also have a vision where they can expand their addressable market, where they find right avenues of growth, where they understand that this is a better option for me rather than the other thing. So they are that way making those discernible decisions. Growth and longevity, I think, is something which is what I'm talking about consistently, that small caps are in that journey where they will grow for a long period of time and create wealth. Lastly, price in our QGLP framework. Price is something, because we have a wide gamut of 550 stocks, we need to find out 30, 40 good ideas, which we find in a reasonable price. So that is where I think our confidence is coming. Now let's come to the growth themes. I'll give a few more examples and I think then we can take questions. So as I told, 72, no, sir, just come back there again. Couple of things again about the portfolio construction. So we will run, as I said, 30 stock portfolio ranging between 1.5 to 4.5% allocations. 70 to 80% will be in small cap and 20 to 25% would be in large, mid and cash. So you have right small cap allocation. We do not try to time market. We never advise that. So our allocations will happen post NFO in 1.5 months. We will not be sitting on the cash and taking cash calls. And in terms of portfolio churn, I think because sometimes what happens, small cap capture value in a short period of time. So we'll constantly evaluate new ideas, and where we feel the upside based on our fair value is limited, we will try to capture and move out of those stocks. So we will be fairly active in our approach that way. Yeah, now we can move. So I think these are some of the things where I told that leaders determine the quality of industry practices. When the largest tire company was hell-bent that I will not take price hikes, the tire industry was through doldrums. When large cement players, they want to push their product, they don't take price hikes. It becomes, so certain industries have this problems where leaders determine the industry practices. So इसीलिए in small cap we are looking for those subsectors where there are 3-4 players, all of them have right industry practices, so we can choose good players from them and we do not have these kind of hassles. So I think in this slide, this is what I want to tell, that we want that right industry structure also when we pick the stocks. Next. Yeah, so now let's talk about when I said the overall runway for growth. Let's take the case of, say, electronic manufacturing services. Now here the whole industry is expected to grow at 30% for next 3-4 years. That means some players will grow at 40-50%. So when stocks have moved up, we need to understand that we have started this journey and what are the drivers. So Ritesh tried explaining you, when we think of these themes, what are these themes? These themes are actually what are those earning tailwinds, what are those drivers which are impacting sectors. So Make in India, for example, it's not just that it will help, Make in India will help auto, it will help import substitution through PLI. Now people know that I can get those kind of benefits. So some of those projects which were unviable, they become profitable, and it is based on your delivery. So it's not that tomorrow I announce a large capex and then eventually how it happened in 2008 cycle, where it never comes on stream. We have seen how the gas, the tall promises, in utilities, the tall promises, they never got delivered. So we are looking at what are those growth drivers, the earning tailwinds, which will help the sectors. And uniquely in small cap, we have so many options. So for example, if I take the case of utility, now utility again is an asset intensive business. You have to put at least some kind of say 300, 500, 1 gigawatt plant. It requires large capital, right? I don't want that exposure. Then what option do I have if I want to participate in this? Then I can go to say the equipment manufacturers. There also I have 2-3 equipment manufacturers which are large. Still again, it is not that we are seeing the 2008 kind of problem where the 15 gigawatt kind of ordering happened. It is still 6 to 8 contained, but I still don't want. Then in small caps, I have option. I can buy a transformer company. I can buy a cable company. I can buy a turbine company, a pump company. So I have so many options where I'm not taking any kind of risk of balance sheet, and still I can participate in that growth story. And some of these businesses, for example, auto ancillary, if I have to talk about, almost 50% of auto ancillary industry business comes from only small caps. So it's not that these businesses are small. So similarly, that is why I'm saying that the growth runway is high. The opportunity to capture is uniquely positioned with small cap. Hospitality, if I have to, hotels, diagnostics, hospitals, I have to look at all of them are practically small cap except few names. So again, more than 50-60%, all financial intermediaries, whether it is, the advisors, the platform businesses, everyone is small cap. Chemical companies, most of them are small caps. So I'm saying that wherever you look around yourself, whether it is in manufacturing or in services, you think of any opportunity and think which business will be benefiting out of it. Invariably, you will find it is small cap businesses which are benefiting more. So lastly, I think how it is different from 2008 is that large capital guzzling sectors this time, they are not expanding the way they happened during last time. So if you look at, as I gave you example, utility, the growth is calibrated. If you look at cement companies, consolidation is happening. So the large two players, they always have, the power to take price hike, defend their margins. Similarly, if I have to look at any large sector, real estate, for example, real estate, they are looking at different models, go through JV. In pre-sales, they are looking at trying to get cash collections. RERA has brought a lot of discipline. So any large sector which had trouble during last cycle, I think this time people are fairly disciplined. So that also gave us confidence that I think market that way is cautious. They know that the growth has to come in a calibrated way. And these are the themes which will benefit and show growth for next 3-5 years. So we will find good businesses from these themes. And then we'll find obviously bottom-up stocks. There'll be a few bottom-up ideas where, if the drivers are says management has changed, they have taken over something, some competition has gone out of the industry. So there are always these different type of ways how you find stocks. So our screening will be differentiated. I think the kind of stocks we will come up with, I think those will be high quality but differentiated. So I think this is about our portfolio construction. I think Ritesh sir, I am happy to take questions. Yeah, this you can also explain.
Maybe I'll add it here. While we talking to our partners all the time, the question comes, that while we are talking about NFO, so much opportunity, what is the allocation in our existing portfolio? So if you look at our mutual fund portfolio or a PMS or any AIF, you will see our current allocation small caps are in line with what Ajay mentioned, some of the unique themes with a very, very high visibility of growth in future and themes which are emerging over the period of time. So if you look at our mutual fund, our balance advantage fund or a multi-asset fund, 30%, 50% allocation small cap, or our PMS funds, founders fund anchored by Mr. Prateek Agarwal, 51% small cap. So all other funds will see 40%, 30%, but you would see that conviction which Ajay highlighted, that as a AMC, as a fund house, we believe that next few years or the time to come, the quality of the company small cap and the opportunity is quite attractive. I'll move ahead from here, and maybe I'll add one more slide that, and I'll edit behalf of Ajay. So Ajay joined us recently, but if you look at Ajay in terms of his track record in past two AMCs at Canara Bank and the Bank of India, he has done a quite an exemplary job in terms of maintaining alpha even in a turbulent times. So we are giving the funds in hands of a very experienced and a manager who will actually showcase in a very difficult times in terms of the small cap funds investment. So I'll stop it here, and I'll just take down the PPT and we will take up the questions from the participant. Thanks, Ajay, for this detailed, brief on the small cap fund. I'm sure a lot of our partners, JM partners, would have got a much more idea why our conviction from where our conviction is coming from the next few years growth trajectory. It is coming from the balance sheet, which has improved drastically. It is coming from some of the unique things which are present in small cap only. It is coming that some of the ideal situation for the small cap to do well, like a growth of GDP or an interest rate pause or a cut, these are actually going towards in the right direction. So I think the first question.
Yeah, we got few questions from the partner. The first one is, yeah, sure.
For Ajay?
Sure.
Okay, super. So Ajay, the first question is that the trend is going towards a large cap and a thematic side, especially the IT and pharma. I think this is the people in the markets are saying that, maybe large is where you should go, avoid small. Maybe there's a question. According to your understanding, how should the small cap will work for the long run? While you highlighted this, maybe you can add more to this question.
So regarding IT and pharma, see, domestic pharma is doing very well. All the companies which are focused on domestic economy, they are doing very well. You see the 11-12% kind of growth is coming. The problem happened in the US pharma, and most of our large pharma companies are more dependent on US. And there, even though when we are like 40% of their overall tablet consumption, we are hardly 0.5 to 1% of their revenue. So the changes that has happened in pharma is that there's consolidation happening. So on the buyer side, there are those 3-4 distributors, and on supplier side, you have 40 companies. Now, it always is a difficult position to be in. So in pharma, we are seeing that mid-cap pharma companies are trying to sell their asset in US at even break-even cost. So there is this problem will settle when few of the participants will move out of market, and then the consolidation will happen, and then you can expect growth coming into pharma. So pharma, we are also keeping an eye, but we are tracking, because see, one thing is, this is what we expect, but it has to be substantiated with numbers. Otherwise, kya hota hai? This is always a story with narrative without backing of numbers. And that is another risky thing in investing, where we promise moon, but we never show them delivery of those numbers reaching to the moon. So I think that is problem with pharma, that this cycle will settle down. We need to again track it closely. Regarding IT, what is happening is post-COVID now, everyone was critical that whether they will have access to IT infrastructure, work from home. So a lot of pent-up demand that came in IT where earnings were like 25%, which is now coming down. And if Globe has a problem and financial markets have a problem, because see, US banking is a larger revenue piece for all the Indian IT companies. So some of these challenges that are happening in Globe, it is hurting. Oil and gas, for example, consumption, for example, retail. So some of these problems are going through Indian IT. And another thing with IT is we are not now $2 billion, $3 billion companies. Well, TCS is now north of 20 billion. So our size has also become so much. I mean, it is, we have to really appreciate, but the size is hurting now. So there will be some pockets of growth. For example, any IT company where the spend happening, automation in automobile, the connected vehicle, the digital transformation, they will benefit. But IT is again going through that patch where consolidation is happening, and we need to again track how growth will come. So this is on IT and pharma. Coming to small cap, I think, as I said, small cap, you please look at the opportunity and how well they are prepared for it. Because how well they can run it is as simple. If I jog every day, my body is fit, I'll be able to run longer. So small caps are doing that thing. If I'm bulky, I will not be able to run longer. So when you talk about run, you need to see whether they're fit or not. So small caps are getting fitter every day. We are seeing that. So we are tracking quarterly numbers. Quarterly numbers give us confidence that they are moving in the right direction. Qualitative aspect, cash generation, working capital reduction, right calibrated capex, that gives us the confidence that we are moving in the right direction.
Yeah, thanks, Ajay. Rati, second question. So Ajay, second question is that while you talked about the quality of the business, can listed startup companies or micro companies can be also part of the portfolio? So basically, it is talking about that will it be only strictly to 250 stocks or small cap, or since we talked about between 2,000 17,000 market cap, we'll also be looking at some of the micro cap which will be coming in that market cap segment.
So see, I'll tell you, any scheme, if you look at who have taken these kind of bet, the allocation would be what? 0.5%, 0.4%. If a stock 0.5% stock move by 100%, it still give you 50 basis point return. But if my 3% allocation moves by 20% only, not 100%, just 20%, it will give me 60 basis point, which is better. So see, we want to focus on businesses where they are profitable, where there's clearly a scale. Because in startup, what happened, they are still going through understanding, establishing their business model. They're still trying to understand whether I can deliver a product at X cost, what will be my profitability eventually when I reach a size. We generally try to stay away from that. We want to see maturity. We want to know what is your stable business model. So as I said, it is good that India is seeing these kind of new changes, but we want to be in businesses which are more stable, where I have to make sure that my downside is low. If in a small cap, I can protect my downside, I can always deliver good returns. So these businesses are extremely volatile in terms of business performance and stock price. And personally, I do not have much liking for them.
So Ajay, just to add to that question, so we have now seen the micro cap companies also have a market of 8, 9, 10,000 crores actually. So would you be, I mean, those good quality, high growth micro cap companies with that kind of market cap?
So, micro cap cannot be 8, 10,000 crore, no, sir. That is like below 500 crore types is what general perception is.
Yeah. For example, I tell you that like a Relegate Enterprises, those kind of company which are slightly more market cap. And the question in that side, if those large top 50 micro cap, which are slightly higher micro cap companies with a higher float in the market, would you be looking at that? I think that is what.
See, it is case to case. We will look at business model. We want that stable business model. We want to know why we are buying a thing. It's not that something has gone down and you buy it on a hope tomorrow it will come up. It doesn't work that way. In investing, it never works that way. So we are sure. This is the reason why we are buying. This is the business model. And this is how profitability will move. That is why we are buying it.
Correct. Yeah, Rati. Next question. Yeah, Ajay, the next question is that, so maybe I can take this also. What type of investor should be suggested for subscription and how much return should we expect? So as far as returns is mentioned, it will be difficult for us to mention a return. You know, we always believe in the fact is that prices are slaves of earning. If the earning growth continues to sustain, I'm sure the investors will be rewarded with a good experience and return in the portfolio, because our endeavor is to only buy good promoters with a higher intent of, of managing business in the right way. companies where the growth is quite substantial, and companies which will be beneficiary of the certain things which would do very well in the coming time. So I'm sure the experience of the investor would be good. I just like to highlight that there are some ideal conditions for a small cap companies to do well, and there are certain conditions which actually stop where the small cap will not flourish so much. So like Ajay mentioned during his address, is that uh, uh, no, you have to look at the companies which are basically micro cap, small cap companies do well in the cycle of interest rate cuts, then in the cycle of interest rate hikes. He also talked about the the balance sheets getting more cleaner. Now these are nothing but these are just highlighting that today you are getting a much higher, more stable, less volatile, high quality group of small cap company to choose from. And that is where Ajay also highlighted that he is only looking at 30-35 names. We are not looking at 50, 80, 100 names. I only look at 30, 35, 50 names. 30, 35 names. And he also highlighted that he is only looking to buy between 1.5% to 4.5%. So each and every pick which he will take will be based on lot of conviction. And so I'm sure that over the next 5-year kind of tenure, an investor should have a very good experience in the fund. So question is what kind of investor? Investor where the allocation of small cap is under-owned. So Ajay also highlighted that while the small cap forms 15% of entire market cap, in mutual fund ownership is 11% only. Now, in your portfolio, you would see a lot of flexi cap funds have 70-80% large cap allocation, right? So if in your portfolio allocation, you see the small cap is under allocated, then you should look at it. People who have the horizon for at least 4-5 years and above should look at it. Small caps are not suggested for a 1 or 2 year kind of horizon. So I'll not recommend, we will not recommend or suggest for just a short period. And people who want to participate in the India growth story of a long term, we call, Amritkal, Swarnkal, whatever you want to call it, then small cap is one segment which Ajay highlighted that you get to, get some unique companies to play for a very, very long time. And that is where the wealth generation happens. So maybe Rati, we'll move to the next question. Yeah, I think Ajay, you can take this. How would you describe your investment strategy? I think you covered it, but maybe for the once again, if you will highlight it for the portfolio.
So our investment strategy is finding those good businesses at reasonable price and do right allocation so that your drawdowns are also limited, because in small cap management, the risk containment is equally important. So we are looking at businesses which are going through earning tailwind, and we know what is driving the earning growth. It's not just that we have projected some numbers, but we do not have enough reasons and to track that also. So find a good idea and track it properly, and then make a good 30 stock portfolio with right allocations. And I think our job is done. So this is our investment strategy.
Absolutely. Yeah. Thank you, Ajay. Rati, next question. Okay. So Ajay, the question is last 5 years, the small caps have delivered 25% CAGR kind of returns. Now, should we expect a similar returns in coming 5 years time? So since I don't want to actually pinpoint a number, I'll leave it for you to answer this.
See, I can tell you one thing. In last 20 years, if you take out the best 20 days, your return drops drastically by 4-5% CAGR. So timing market is very difficult. And my point is another, once you have accumulated, say 50 lakhs, 20 lakhs, 1 crore, even a 15-20% return is very good. Whereas if you have a 2 lakh portfolio, it gives you 50% return. It is 2 becomes 3. So please accumulate it the size and then see the benefit. A 15% return on a large base is much better than doubling of a small bet. So I'm saying that there you need to, if you do not require capital, please let it accumulate and see the difference, because returns are sometimes concentrated. In a year or two, you will get that kind of return. So please benefit from that, give your portfolio a chance, and we are in that right cycle.
Yeah, Jay, very well said. I mean, people expected 2020 to be a difficult year, and small cap actually fired like anything. 2021-22 was a difficult year, whereas people thought that it would be a great year. So your returns in small cap will not come year on year. It will be periods where the returns will be very substantial, and then periods there will be returns will be very muted. You need to be there the entire cycle to play around. But I only like to highlight it is that for the next 2 years, for example, the estimated earning growth is close to, let's say, 35-38% on the small cap side. You are going to see a cycle of interest pause and cuts now. Pause is already there, which last 2 years we have seen a cycle of interest rate hikes. Now we are going to see another cycle, which is again positive for the small caps. Next year, estimated average growth of GDP is around India around 6 to 6.5%. Between we can debate about that. So growth is substantial. Again, there's a positive correlation between small cap and GDP. So if we look at all the underlying indicators today, it looks like that this small cap earnings and the companies, companies can actually thrive on the push of the current government for the manufacturing and PLI, the various things which Ajay covered. So I believe that if you remain invested for not only 5 years, but 10 years, some serious wealth creation can happen over a period of time. But it may not be only limited to 2 years or 3 years. You need to remain invested for a longer period. Is that what Ajay tried to highlight when he mentioned that? Yeah, Rati, next question. Now, this is unique, Ajay. I have a view, but maybe I'll add it and maybe you can answer. So if you look at other small cap funds in the industry today, I think the most focused portfolio will be around 60 stocks plus minus 5 stocks. We are one of the very few which you count on your fingers, AMC, which focus on high quality, high growth. And we are known for in industry for managing the high quality portfolios also. And this is what Ajay suggested, that he will not buy 0.5, 0.2, 0.1 kind of allocation and build a portfolio 80 stocks, which generally the style you will see in the industry. He is more focused towards creating a portfolio of high conviction, high growth, with very good promoter-led companies in the portfolio, which are from the themes where we see the very substantial earning growth over the next few years. So this is what I can tell you, that how we are differentiated, but let Ajay add more points to it, and then maybe you can get your complete answer.
So, sir, you have actually covered it. See, our offering is different that way. We are giving you a good quality portfolio. It is easier to manage. So if you look at the other schemes, their AUMs have increased to the size where if a 15,000 crore scheme wants to buy a 2-3,000 crore market cap company, it is virtually impossible for them. So we will look at those opportunities of 2, 3, 4, 5,000 crore market cap companies, which I think some of the small cap schemes now are unable to do. So that way, I think in small cap space, because I have managed for other scheme also in small cap. So I understand the challenges. So for us, our size will be benefit. One is our style will be a benefit for us. Our nimbleness will be a benefit for us. So that way, I think we are clearly uniquely placed.
Yeah, sure, Ajay. Thank you so much. So, limited point is that if you see our other portfolios also not only a small cap, but if you look at mid cap, larger mid cap, or a balanced and managed fund, you will see our top 10 stocks or top 15 stocks do not have an overlap with the competition. We will not see the similar names across portfolios. You will see a very differentiated approach in terms of portfolio construction. And that is what Motilal Oswal AMC offers you. It is that it will not be a differentiated portfolio. And in the client's portfolio, overall investment, it's good to have 2-3 different kind of styles and portfolio rather than having a similar kind of strategy in the small cap. Like I said, average holding in the entire small cap category is close to 80 stock. What Ajay highlighted that he is looking at 30-35 high conviction. That is the biggest difference I can tell you that we are giving to a client's portfolio. Also, not to say that we will also be creating a portfolio at a time when we are getting a fresh flow, like Ajay mentioned. Now we will not be having a problem of deploying a 10,000 crore fund. We will have, let's say, 1,000 crore or 1,500, whatever number be with your support, but we will not have a pressure of deploying a very big AUM at this point of time. So we will not get into that issue of allocation and other things. So we are completely differentiated thought process, and I'm sure your client will be beneficiary of that differentiating style from the Motilal Oswal AMC bouquet of products. So I believe, Ajay, thank you so much. You have taken all the questions from the participants. And on behalf of Motilal Oswal AMC, I would like to thank JM Financial for giving us the opportunity to address all the partners. We request you to please look at this new offer from AMC. It's a very differential strategy, and we request your support and to make it a super successful NFO. And I'm sure Ajay will also ensure that all the investor experience in this fund over a period of time is good, and the investor will actually be very happy with the decision. Anything you'd like to add, Ajay, before we conclude?
Thanks everyone for giving us time to explain our point of view and how we plan to run this fund.
Thank you.
Yeah, thank you, Ajay and Ritesh, for explaining it so well, throwing light, giving us all the clarity. Thank you so much. And thank you, partners, for being with us today. Thank you, everyone.
Everyone. Thank you, Ajay. Bye-bye.